Hello and welcome everyone for another weekly market commentary from StashAway. With us again, our Chief Investment Officer, Freddy Lim.
Hi there.
Thanks for being with us again, Freddy. Lots of interesting topics again. I know we've been saying this pretty much every week, right? Every time we're on. But lots of things, noise going on this week already, right? On Monday, let's get right into it, right? Coronavirus,
Yes.
Seems to be, from the headline news, seems to be kind of like escalating because over the weekend, more cases outside of China were actually found, right? So this obviously triggered, how is it going to go further, right? How is it going to go further, right? The markets reached only recently, right? February 19th, the global markets reached new highs, right? All-time highs. How do you put this into perspective for people listening now, right? And
this is not particularly unexpected because for once Italy is seeing infections, right? And we've seen South Korea, a lot of Koreans are now being quarantined from entering 14 nations. Yeah. So the moment when it goes global is when the global markets start reacting. And however, what we have always been saying early on is that if you look at past epidemics and their influence on the markets, looking at HIV, looking at SARS of 2003, looking at Zika virus, looking at all even swine flu, and impact of the markets normally are no more than 2 months.
yes.
So maybe the clock has just started.
Yeah, and this is the average, right? We don't know. Is it
average.
3 months? Is it 4 months? We don't know, right? But the market is obviously, it absorbs information so quickly and prices it in as well, right?
Yes.
So this is why when you listen to us in this video on Monday this week, right, we had a big drawdown in the markets for the first time, right? I think global equity markets went down about 3.5% roughly throughout the world, right?
Yes.
But they're coming up from very highs, right? So putting this into perspective is really, really important as well, right? Do you foresee this drawdown to last, or do you have any idea on this?
That's a fantastic question because when we look at the studies on past pandemics on markets, it's normally taking from peak to bottom. And now we have pinned the peak at around the middle of Feb, right? So in past epidemic episodes, on average, none of the episodes other than HIV has managed to influence the market for more than 2 months. In the case of HIV, it's 5.1 months, right? So, and these episodes have proven to be short-lived, and they tend not to alter the course of the economy, but they rather slow things down and hence create a lot of short-term uncertainty, but it doesn't really do anything to your long-term investment plan.
No, and I think that's why I wanted to get to a little bit as well, right? Because having a globally diversified portfolio, I know we preach this a lot, so don't get mad at us, but this is something we truly believe in, right?
Yes.
And I think you see it work now, right? Why do we have an allocation to gold, right? Why do you have bonds in your portfolio? It's for times like this, right? Why do you have a dollar hedge and exposure to the US dollar, right? Tell us a little bit about that. Why? Because, right, a lot of times when times are good, people always complain that, you have too much of this, you have too much defensive portfolio construction, right? But having a globally diversified according to your goals is so important, especially for times like this.
Well, from day one, there's a few things you always needed to do, regardless of whether the market is doing well or not. You always need a sufficient amount of protective assets in your portfolio. You need a certain amount of exposure to safe haven or funding currencies, US dollar, Japanese yen, Swiss franc. And 3, you may think about geographies. So in the stage 1 of the crisis, we see that the market barely reacts when it's just confined within China. And now it's gone a bit more global. So henceforth, the MSCI World Equities, the US S&P started to react. But this is not surprising at all.
No.
And if you look at past studies, it always pinned the peak to bottom at around 2 months for an average pandemics. And in the case of HIV, 5.1 months. Those studies remains the same. The conclusion is it doesn't change what we do as long-term investors. We invest our savings month to month.
Yes, and think about it, like especially over the next 2 months, let's say 2 months, maybe you get, with your monthly dollar cost averaging, you get a few more units of whatever you're buying for the long term, right? So this is part of having a plan in place, right, and following that plan closely. So I think that pretty sums it up. If you do have any questions, as always, feel free to put them in, and we'll definitely get to them again over the next week.
I would add a certain thing that a lot of Singaporean investors, a lot of friends of mine on a lunch table would talk about this. Who has ever lost money investing in REITs back in 2003 at the height of the SARS? And we could find nobody by at this time, right? So the moral story is not to focus too much on the short-term, emotional, intense responses of what the media says, but really and say, look, this is my plan, I stick to it, I have my monthly contribution, I have my savings, and this is what I'm going to do for the next 10 to 20 years. And those investors are the ones that today can come back and tell us, back in 97, it didn't matter. Back in 2003, it didn't matter. Back in 2008, it was yummy.
No, and it's not like we're trying to downplay it at all, right?
No.
It's actually what we're trying to say is also that short-term volatility, especially something like Monday, like a big drop of 3+%, it's painful, right? Of course it's painful. We're not saying it's not painful.
If you borrow money to invest.
Right? Exactly. It might feel painful for the day, right? But those are the things, those are like these drawdowns that over time create value, right? Markets go up and they whittle down these investors that are just invested, like you said, on margin or whatever. They need to get out, right?
Yes.
It's the normal market cycle to do. So that's pretty much on the coronavirus currently, right?
Yes.
Another big topic, especially for our listeners from Malaysia, especially in the mid of all this corona headline news. President Mahathir, right?
Prime Minister Mahathir.
He dropped a little bomb yesterday, right?
Yes.
Maybe you want to give a little bit thought on what's going on in the political scramble up in Malaysia for our listeners to, and also, I think this goes back into the globalization of having global portfolio, right?
Well, in a way, it's not quite surprising because from day one, when PM Mahathir came back to politics and won the election, his age is always a concern. He's very old.
Yes.
And there's need
94.
and there needs to be a succession planned. So what happened is in the short term, we're going to hear a lot of concerns in the media about who's going to succeed Dr. Mahathir in running the country. At the moment, acting Prime Minister Aziza is going to be the one most likely to take over the administration. However, there's questions about whether Mr. Anwar himself is going to now step up to run for the PM position. So lots of noise in the near term. In the long term, I would have to say it's always already there for serious investors. It's never going to be a surprise, right?
Yeah.
No,
and I think there was a lot of, so this is now the pinnacle of the news, right? But EPF was coming out with their yearly numbers. They were really, really good, right? Obviously, the ringgit is depreciating towards the US dollar. So again, I think also for everyone listening from Malaysia, it's also a lesson in having global exposure, right?
Yes.
Don't think just inside the box, right? Go out.
I mean, when you're long just Malaysian equities or assets, you're long palm oil, you're long regional imports, and so when you have a diversified global portfolio, you're most likely to be less impacted by any short-term development as such, right? Mm-hmm. So, and another example, very good, that goes to show that what we need is a global diversified portfolio that's super balanced between growth, protection, income, and a bit of safe haven currencies.
Yeah, exactly. I think that, again, sums it up for this as well. So let's go to some questions from listeners. After the last video, we got another couple questions, so this is actually hopefully becoming more of a theme. So if you ever have any questions, please feel free to put them in below the video, because we really do take them to heart and we will ask Freddy them. So Freddy, the first question we got was, what are our thoughts, right, on the two scenarios in the US election, right? One is Democrats are going to win. The second one is Trump gets reelected, right? How is the market going to react to it? Do you have any kind of point of view on this, or can you maybe explain to listeners a little bit better?
Well, I first have to say that outcome of elections are important, but history has proven them to be short-lived. So you could say that, well, it's good that the Democrats have now more business-friendly candidates like Mayor Pete Buttigieg and Miss Amy Klobuchar, right? But then the truth is that Bernie Sanders is the lead runner on the Democratic side.
Just locked down Nevada, right?
Yes. Yeah. And what the Democrats so far has been doing is to bring down the likes of Michael Bloomberg and all the other business-friendly leaders. So they're in a way self-destructing in terms of their appeal. They're becoming more left, more social with Bernie Sanders. Now, would that mean that Trump has a better chance? I'm not a political expert, but it does, from my point of view, improve the chances of Trump's re-elections.
Yeah.
Right?
So should that happen, what do you expect the markets to be?
Trump is a known entity to the market by now.
This was a little searching for something the first 3 years, right? Pretty much. But I think now, as you rightly say so, the news or his Twitter is like kind of incorporated now already, right?
Yes.
So.
And if Bernie Sanders is going to run up to the lead on the Democratic side, it's still too early to say that he's going to maintain that lead. But there's also strong contenders that's going to compete.
Yes.
Into November. So what I'm going to say is overall the probability is more healthy now than before.
Yes.
We don't just have Trump. We have other candidates such as Michael Bloomberg, Peter Buttigieg, Amy Klobuchar, and the likes to run into the mix. So overall, do not react to the naysays of the media.
Yes, and I think that you won't see that much, focus from the media right now with other things being there, right? The closer we get to the election, the closer there will be a clearer picture. The market will also price things in, and we can talk about this again, right?
That's right.
But for now, I think this is a perfect answer on what this person was looking for. Let's get to question number 2, a final question we got from last time. And they're asking is pretty much, is StashAway looking into other funds, right? Such as, Irish domicile funds or other fund providers in general, right? Without naming, any one of them. Do you look at this on a, kind of daily basis? What would make a decision of switching one for the other or things like that? I think that's kind of what they want to know.
The shocking thing I'm going to say here is that StashAway looks at all funds. It's not just ETFs or unit trusts or mutual funds. We look at specific funds offered by other fund providers as well. And it's all based on merit. As long as they bring consistency to their historical track record, as long as they bring risk disciplines, as long as they bring differentiation to what's already on the platform, they are all considered at any given time, regardless of who they are.
Yes. So we always look at what's best. Does it make sense? If it makes sense, why would we not want to do the best, right?
That's right.
So this pretty much sums that one up,
right?
It
just so happens right now, therefore, the asset classes that StashAway would like to track, because they go into building the portfolio that we want to construct, the multi-asset, highly diversified portfolio that we have seen so far. Those building blocks, right, are what we want to track, and ETF so far has done a better job than most other formats in tracking them. But at any given point in time, there's a better alternative. We would always do what's best for our clients.
Exactly, and I think that's the main message here, right? Again, if you have any questions for Freddy, please put them below the video in the comment box, because we happily take these up every week with you. Now, let's wrap it up by talking a few of the events that we have coming up. In Singapore, next Wednesday, March the 4th, we're actually going to have a live webinar, and we're going to talk about Financial Plan B. So if you're interested in learning more about wills, trusts, some insurance structures that can help protect you in case of emergencies, tune in for that. You can sign up via our StashAway Academy page, our Eventbrite page, Facebook page. You can also find the links below the video in the notes section. In Malaysia, we actually have on March 11th, that's a Tuesday if I'm not wrong, we're going to talk about how to invest with ETFs. So we'll teach you all the tools you need, even if you want to invest in ETFs by yourself. So that's on March 11th. Again, link below to sign up. Otherwise, Freddy, thanks again for being here. We're looking forward to being with you again soon, and hope to get many more questions.
Ciao.
Ciao. Subscribe to our YouTube channel to get notified whenever we have new content out for you. Also, don't forget to download the StashAway app. It's available in the Apple App Store as well as the Google Play Store. so you can start on your financial journey right now.